Get going on a chat with Syrma SGS. Well, the numbers, the positive part was on their margins, which after 5 straight quarters of seeing contraction, did pop up. To understand what went on in the past quarter, what's the way ahead, we're joined by Mr. Jasbir Singh Gujral, who joins us on the show. Hi, good morning, Mr. Gujral. Thanks a lot for joining in. Well, let's clear a couple of numbers. Margins, they have bounced back to normalized levels, which is encouraging. Should we expect it to hold around these levels or improve in the second half of the year? Point number one. Point number two is, your revenue guidance earlier was 40 to 50%. Sticking to that?
Good morning, and always a pleasure to speak to you. As I had alluded to in my Q1 earning call, the margin profile of the company is dependent on the verticals which form the sale revenue for that particular quarter. In the first quarter, we had a bump up in the consumer segment, which pulled the margins down. Now we are coming to a more normalized product mix of sales. And we believe that going forward, we will achieve the guidance which we have given on the top line, which is about a 40-45% growth to about 4,500 crores. And a EBITDA figure of 310 to 320, which translates into about 7%. We are confident of achieving that. Quarter on quarter, whether it remains 8.8% or it comes down to 8% or gets a further bump up, would depend upon the composition of the sales. But on an annualized basis, we are very confident of delivering what we have guided the street.
That's on the top line. So you're sticking to 40 to 45% on the top line. What about margins? And that will obviously, like you're saying, it depends on the business mix. So if we talk about full year FY25, what is your targeted mix? Will consumer stay at around 40%, or are you looking to pull up and do more business in the segments where you have better margins? And which would be your highest margin business, if you could tell us that as well in the mix?
See, we believe that this year consumer would be around 40%. Q1 it was 54%, Q2 it is 33%. We believe it will be around 40-odd%. And with 40-odd% of high volume consumer mix, we are on track to deliver the guided EBITDA, which is 310 to 320 crores, which translates into about 7% of the top line of 4,500.
Which is the second part of my question was that while consumer pulls down your margin, which are the most margin accretive businesses? Is it industrials? Which is the other segment?
It's healthcare, medtech, exports, design engineering, followed by industrial, followed by automotive. And each one of these comparatively high margin business has seen an uptick in Q2. For example, my automotive business this quarter constitutes about 25% and my industrial about 29% against 23% in Q1. And going forward with the orders in hand, with the approvals which we have got, we are confident that even if the consumer business is at 40-odd% or a little above 40%, the growth in these segments will sustain us to deliver the guided EBITDA.
Okay, 7%. Mr. Gujral, good morning. Prashant here. So beyond, any thoughts for how will this margin trajectory move? I mean, what can this get up to internally? Can you get into the double digits over the next couple of years? That is one. And exports is about 22% of your revenues. That grew only about 3% compared to same period last year. I'm talking about Q2 numbers. Could you give us a sense there?
See, we had a subdued H1 for exports. Q1 was comparatively weaker. Q2 has seen a rebound. And this rebound we expect will gain momentum in the coming 2 quarters. And we expect that exports by the end of the year would grow by about 20-odd%, whether it is 20, 22, that 25, that's the only thing. But exports will grow. We have grown exports by about 19% CAGR till FY24, and we expect that this year also the exports would grow. The second half would be much better. But the second question, or rather the first question of the margin guidance for the next 2 years, we believe we should continue to strive to grow beyond the guided margin for this year. Now, whether it comes to 7.5, 7.28, I really can't commit. But the 7 is the bottom, which we will deliver on the expanded revenues of 40-45% growth year on year.
Okay, all right. Mr. Gujral, a couple of other aspects that I wanted to ask you on. Is there a PLI amount that you have booked in the past quarter? If yes, how much was it?
See, PLI we have booked, and I think it's about 12 or 15 odd crore rupees of PLI amount.
All right. And it's recorded in your revenues or other income?
As per the guidance, it is recorded in other income.
Other income. All right.
Other operating income, because it's part of the same. It's not clubbed with the main revenues, it's guided, included as other operating income.
Got it. Also, if you could tell us, Johri Digital Healthcare Limited, did it contribute in the past quarter? Yes, if you could quantify that.
See, we see as a consolidated figure, it contributed to the profits as per the guidance which he had given. Since you have raised the JDHL question, I would like to share with you that in the last quarter, we got a PLI approval for 2 medical devices, which are related to cancer, radiotherapy, and what you call heart monitoring and other things. This PLI for these 2 devices, I believe, is a very, very significant achievement, because it will enable the company to target these 2 segments in the coming years. I don't see uptick because of this in this particular year, but going forward, it will go up. And I'll also like to say that we opened our design center in Pune dedicated to medical devices. And the initial response of design and development services from global clients in Japan, Europe, and America has been very, very encouraging. And we believe it will form a decent amount of our revenue streams in the coming years.
All right, so that's progressing as per plan. Very quickly, just one final number. What is the current order book?
The current order book is about 4,800 crores. We booked about 1,200 odd to 1,200 odd crores in the current quarter. I personally don't believe that order book in the EMS space is a real area of concern. I think there is enough business to be picked up. You have to work for it. But the order book is healthy, and it is a good composition of the high margin and the better margin businesses.
Appreciate Mr. Gujral, thank you very much for joining us. Appreciate you being here, and thanks for that sort of explanation and the perspective. Look forward to our next conversation.